Hey, good morning, everyone. It's Marv Eisen from Timeless Dollar. It's Friday, March 22nd. It's just before the market opens. It's 9:27. And if you haven't seen my videos before, I'd just like to introduce myself. My name is Marv Eisen, and I run a website, timelessdollar.com. And I try to help people find a way to make extra income if they've lost a job, looking for a job, or on fixed income or limited income, or you just need extra income. I suggest on my website many different ways that you could do so, or especially trading S&P E-mini futures. Years ago, when I was looking for a way to make extra income when I lost my job, I gravitated toward the S&P E-mini futures trading situation and lost a little money at first. Then I got an education, took me a while, and now I'm self-sufficient and I can trade and make money fairly consistently. Today, I'm starting out not where I usually start, but which is at TradeStation these days, but or TradingView, but at the CME simulator. CME Group, CMEgroup.com is a place where you can learn all about futures, equities, that kind of thing. But at any rate, I just want to call your attention to the chart. It's just before the market opens, 9:28. Yesterday, you can look at my screen, you see this huge run up. That was a result of the Federal Reserve announcing a halt in interest rate increases for the rest of the year. You never know, right? Read my lips, no new taxes kind of thing. But at any rate, I called that perfectly. If you saw my videos yesterday, you know in the morning I called it, in the afternoon I executed. Everything worked out great. I made money and on a market that was pretty easy to spot in terms of the momentum. Today, we pick up where we left off yesterday, and I want to call your attention. If you were watching yesterday, this was the big run up yesterday, okay, guys? But at the end of the day, the market sort of got hung up, topped out at about 28.65, declined overnight, and it came down to where we are right now at 28.46.50. Market's going to open up right. It's opening up right now. I'm not going to trade. I think it's going to be a tug of war session because with the big run up yesterday, there's going to be a lot of profit taking, and we are going to just sit out here for a minute and see what happens. Remember, there's always another bust. Don't jump into the market. My advice is the best way to play the market is not to play the market. Sit on the sidelines, wait until you see momentum building in a direction or a trend building, and then you can dip your foot in a little toe at a time and see if that works out for you. But at any rate, we're just going to stand by and watch. The market's coming down, coming off the overnight lows, as a matter of fact. And we're going to just stand by here. If you want to execute a trade, I would sort of recommend against it. As you can see, this is a 1 hour chart, by the way. And you'll notice that here on March 20th, we hit a top before the market retrenched in preparation for that big Federal Reserve announcement. But now we're about at the same place. And I would expect today to be choppy or maybe give back a little bit of what the market picked up yesterday with that very positive announcement by the Fed. But let's just stand by. Hi guys, I'm back with you. It's 9:32. I switched to the TradingView chart, which I liked for demonstration purposes. This is a paper trading setup that I'm in. And I'm just here to teach you the market. Here's where it closed yesterday. Here's where it opened today. Retreated a little from the open, came back, and now it's just floating around. Traders are getting their sea legs. This is the stochastics, at least on the fifth. This is a 15-minute candle. The stochastics show oversold, not quite oversold, but this is an area of interest. Here's yesterday. Beautiful day. If you just went long and went out to go shopping for the rest of the day and came back and sold your position, you did great. Don't recommend anything like that, but here we go. So the market retreated, let's see, 28.44 it opened, went down to 28.40, 28.40. Now coming back a bit. You want to jump in? Nah, don't jump in. Very often a gap will form like you see here, and that gap eventually will be filled. All gaps get filled. Doesn't necessarily happen at the time the gap is formed. Could be a day later, 2 days later, a week later, but all gaps get filled. So if you went in, you were wrong, right? Told you, don't do that. There's no trend here. There's no momentum. There's no reason to trade this market in the early morning. Those of you who've watched me trade before know that the morning is a great time to jump into a trend because morning sentiment is it usually has a good deal of volume behind it. People form their opinions overnight. Today there's news that bears on the market, not from the United States, it's from Europe. German manufacturing index is came in way under what the expectation was. So that's a warning sign. That's a canary in the coal mine kind of thing. Also, Brexit. Nobody knows what's going to happen with Brexit. I hear some banks are leaving London. Some other international businesses are leaving London. This doji that's forming in the first 15-minute candle is a sign of uncertainty. And whenever you see a doji form, I mean, if you're a student of Japanese candles, you know that the Japanese see a doji form usually in a day pattern. You know, something like this is a doji, guys. That's a signal to just, keep your powder dry. I'm going to sign off here. It's 9:35. 5 minutes into the market, nothing happening, no trend established. There's no reason to trade. If you took a position, you really are gambling. You don't know what the heck is going to happen today. So just stand by and wait. By the way, you don't have to trade in the morning. You don't have to trade in the afternoon, although those are the two times that I recommend that you do trade, because that's when the volume is the heaviest. If you are just getting into trading, I highly recommend paper trading only for at least 3 months. 3 months, at least 3 months. Do your homework, take my course, study the material, put it into practice in a paper trading chart. This TradingView is a great charting service, and I highly recommend it. It's free. It's a great service and a great way to practice paper trading. This is Marv Eisen for Timeless Dollar. Join me in the PM session. I'm not going to trade today because yesterday was just a blowout day, and today I think it's just going to be that kind of activity. But I just want to close off with one comment before I leave the morning session Friday, March 22nd. I trade watching the price action for the most part, and the only indicator I use is stochastics. Stochastics is down here at the bottom of the screen. If you took stochastics as a holy grail indicator of which way the market was going to go, you'd say the market's going to go up because the stochastics are showing that it's oversold. Well, look, if you went long over here, see, let's follow this down. If you went long over here and you thought the market was going to go up, well, look what happened over here. The next 5 minutes, it went down big. Next 5 minutes, it went down big again. So the stochastics is only an indicator. Remember, all indicators are trailing indicators. The price is going to tell you what the market is doing. Every indicator trails the market. It's not the other way around. So use indicators with caution. An indicator, just because it's showing oversold or overbought, doesn't mean it's not going to go down more or going to go up more, which is the case of what happened here. So I just wanted to call that to your attention before I left. Okay, Marv Eisen, Timeless Dollar, Friday, March 22nd, 10:18 in the morning, and I'll see you in the afternoon.